Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Let's talk about one of the most misunderstood institutions in America, the Federal Reserve. Who actually owns it? You hear a lot of things online. Some say it's a secret group of powerful international bankers. Others say it's just another government agency like the post office. The truth is much more complex, and it's a unique American invention that's best described as a hybrid system, part public and part private. To understand who owns the Fed, you have to see it in two parts. First, there's the main governing body in Washington, D.C., the Board of Governors. This part is purely governmental. The 7 members of the board are appointed by the President of the United States and confirmed by the Senate. They are public officials, and they are the ones who hold the real power over the nation's monetary policy, like setting key interest rates that affect your car loans and mortgages. So, the ultimate control rests with a public, government-appointed body. But then you have the second part, the 12 regional Federal Reserve banks scattered across the country in cities like New York, Dallas, and San Francisco. This is where the private aspect comes in, and it's the source of all the confusion. By law, all nationally chartered commercial banks in a region must buy stock in their district's Federal Reserve Bank. So, banks like J.P. Morgan Chase or your local community bank technically own shares of their regional Federal. But here is the most important part: this is not ownership in the way you own stock in Apple or Tesla. It's a completely different animal. For one, they can't sell or trade this stock. Second, they get a fixed dividend, by law, of 6% per year on their investment. It doesn't matter how profitable the Fed is, they don't get a penny more than that 6%. Third, this stock gives them very limited influence. They get to elect some of the directors for their local regional bank, but they have absolutely no say in the big decisions on monetary policy made by the Board of Governors in D.C. So, what about all the profits the Fed makes from its operations? If the private banks aren't getting it, where does it go? After the Fed pays its operating expenses and that legally mandated 6% dividend to member banks, nearly all of the remaining profit is sent directly to the U.S. Treasury. We're talking about tens of billions of dollars a year that go right back to the federal government to help fund public services. This system was designed as a compromise back in 1913. The goal was to create a central bank that was independent from short-term political pressure from Washington but still ultimately accountable to the public, not private bankers seeking a profit. It spreads power between the government in D.C. and the regions across the country. So, in short, while private banks are technically shareholders in the regional Feds, it's an ownership that comes with no real control over policy and no claim to the profits. The true power and accountability lie with the public, government-appointed Board of Governors. It's not a simple answer, but it's a uniquely American system designed for public service, not private gain. Thanks so much for watching. If this explanation helped clear things up for you, please give this video a thumbs up. And for more straightforward explanations on how our economy and government work, make sure you hit that subscribe button and ring the notification.